Yo, yo, yo. What's up, guys? Welcome back to the backtesting session with the Moss. Hopefully, you guys are doing great. I am doing great. Every time I win my trade during the AM session, I have like the rest of the day free, so I just feel great all the time. So, um, let me just fix that right here. All right. So, hopefully, you guys are doing great. This session is a backtesting session. I don't know why the title is this title actually. I tried to play with it a little bit, but couldn't. So all right. As you guys know, let me just go right here. All right, perfect. So you guys can see my screen here. This is the trade that I took today with y'all on my on the lunch and learn segment at 12 p.m. So from 12 to 1 p.m. EST. Let me go over all the best setups of the day, recap it a little bit, go over the reason why I take those setups, my framework overall, and then I want to lean a little bit more on the backtesting side in the session and just practice a little bit more than just spitting theory, which is usually what we do in those sessions. So if you have any questions, guys, make sure to type them in the chat. It will be a pleasure for me to respond to them. So, oh damn, I didn't make any announcement. Let me just do an announcement on my Discord and on Twitter. That should bring the viewers up. All right, all right. Let me just do that. Announcements. So by the way, I'll be giving away two 50K growth accounts today. So make sure to note that. Backtesting session plus backtesting tournament. Perfect. All right. Posting that on my Discord right now, and then gonna post it on Twitter, and we should be good to go. Right here on Twitter right now. All right. Posted that on Twitter also. So we're gonna start right now. I took two trades today, one of them on this account and the other one on my 5Tradeify account. So let me go over everything that happened today and the reason why I was bullish when everyone was potentially looking for shorts. All right. So here, market structure for me is extremely important to a point where all my bias is either from market structure or timing. Okay, what do I mean by this? Let's just go over the AM session here and how that hourly candle printed. When this hourly candle prints, I'm always looking at, are we breaking above highs? Okay, so if we have some sort of range like this, which we had, if we are breaking above buy side liquidity pools, then my job is to look for retracements and be bullish until proven otherwise. Okay. For me, as soon as we break above a buy side liquidity pool, this is a buy model. Okay. But if we have the same kind of buy side liquidity pools that are forming basically here inside this range, but we're sweeping the high, closing back, then I will not look for longs because this is way too dangerous. So here, going into this hourly chart and what happened this morning, we broke above this buy side liquidity pool, which was the London high. Okay, London high being, for me, I judge the London high is from 2 to 5 a.m. EST. All right, some people would disagree, but I just use the 4-hour candle. Okay, for me, the high of the previous 4-hour candle is telling us the story. So if it's at 2 a.m., then I still consider that high being London, even if London session starts at 3. I really don't care. But usually I look at that 4-hour candle. Are we closing above that 4-hour high, or are we closing back inside the range of that 4-hour high? Okay, same thing. So then, are you streaming on X also? Yes, I'm streaming on X, but on the Tradeify TV platform. So Tradeify TV account. All right. So right here, we broke out of that range. What does that mean? It means that my bias is bullish. Okay. I want to see, I'm predicting that the next H1 candle will close bullish. Okay. Why am I predicting that the next H1 candle will close bullish? It's because of the structure. And even if I'm wrong on that thesis, there is so many confirmations that will tell me not to get in that trade, and so many confirmations that will tell me, hey, this setup is absolutely beautiful. It aligns with your bias, so you need to get in ASAP. Okay. So this is my theory. In theory, since we broke above the London high, we closed above that 4-hour high. On this hourly chart, if we go down, okay, what is most likely going to happen is that a new candle will open up here. It will shoot up, do whatever it wants to do, then starts to go down. When it starts to go down, all the people are looking at this reversal. Okay, they are trying to reverse the market, but in reality, if you don't FOMO into that short, even if it ends up playing out, it usually doesn't give you a good trade and a replicable trade over the long run. Usually price tends to basically give you more continuation setups than reversal setups, and those reversal setups are higher risk to rewards, but they are less consistent and harder to replicate over the long run. Okay, so this is why I put a lot of emphasis over the fact that we need to look for continuations when that first hourly candle is just closing, telling us the story. Okay, so here a brand new candle will open. Let me just give you the market mechanics of that candle. What it will do usually is that it will open, do whatever it wants to do actually. Okay, it could go down, it could go up, but what I'm monitoring here inside this candle is the opening. Okay, so right here, price will most likely go to the upside first. Okay, generate what we call buyers. Okay, generation of those aggressive buyers. Most likely they will get squeezed after popping that high. When we get that, so the first structure we will have on that hourly is going to be a break to the upside. If you FOMO here, okay, of course this could hold in order to create new highs, but is it really the confirmation that you're looking for in order to get in a trade? No. Okay, you want more context. So here, price goes up first, you're still not interested. You don't want to buy in that premium yet, and still no fake outs that is telling you that sellers are being squeezed. So then what is most likely going to happen is that this candle will flip back down. Okay, it will create an up wick, right, sweeping the previous candle's high, and it will start to go down looking bearish. Okay, at this point right here, what a lot of people are doing is that they try to reverse the market. They're like, okay, a bearish candle, if that candle is going to close bearish, it will create a open high, flip below the open. I need to get in right here, because if that candle ends up closing bearish, I'll be in a really good trade, in a high risk to reward trade. This is true. This is true, but is it the best way to trade NQ? In my opinion, hell no, because the amount of times that you're going to see this reversal actually working out in your favor from 10 to 11 is extremely slim, in my opinion. Okay, just predicting a open high, flip below the open, and just basically positioning yourself so early in that hourly candle is not the right play, in my opinion. Okay, it's a really high risk reward play, but it's not consistent. So what I'm doing here in this case is that I'll remain bullish. I remain bullish, so that candle will keep going down. And that candle, when it keeps going down, it will generate a lot of sellers inside this range. So this market structure shift is usually where a lot of people will get in and will predict that the next candle will close bearish. What will I do though is that I will treat this as a fake market structure shift. While price is shifting, I know that the odds of the next candle printing bullish also, because we only reverse 35% of the time, is pretty high. So then I will wait for this candle to flip back bullish. So it is bearish right now, but it will most likely flip back bullish at a certain moment if we find resistance right here. Okay, so I'm only looking at the opening price, and I'm like, right, if we're getting above the opening price again, we will most likely be in a scenario where we just formed the upwick of a future bullish candle, and a lot of those sellers are being squeezed inside this range, basically they are thinking that price is going to reverse, when in reality it only does that 30% of the time. Okay, so here, when price is going down, I'm waiting for price to resist here, okay, find resistance, and then push back to the upside. Boom. So as soon as it flips back to the upside right here, this candle will no longer look bearish, it will look bullish. So then that candle went from looking looking bullish, okay, to then bearish, to then bullish again. But then right here, looking at the timing, if that low has been formed in the range of, let's say, I would say 20 to 35, timing wise, you have the right enough, I would say you have the confidence in order to go long and be potentially certain that this low is going to be a protected low. Okay, I have a lot of scenarios that we could go over from the last few months, but usually price tends to continuate the move from the previous candle at that 9 a.m. candle, basically. Okay, especially in the current market conditions that we're at. So let me go over the lower time frames and show you what I saw. Okay, so since we broke above this buy side liquidity pool, I am remaining bullish while everyone is trying to reverse the market. So here, let me go to this 1 minute chart and I'll mark out two things. Okay, I'll basically mark out the open of the new candle and the structure that is happening after that candle just closed and a brand new one is opening. So right here we open, we take out this high, all good. This is where a lot of people will go long, okay, basically predicting that this low is going to be the protected low of the new H1 candle. This could be it, right? I don't think this is a bad trade overall. It is still a liquidity sweep back into, in this case, a 5-minute fair value gap. Then price is flipping back to the upside. In my opinion, if you were in here predicting that this low was going to be the protected low of the new H1 candle, two things. Timing wise, if you predict that the low is going to get put in at 10:05, there is so many things that could happen in the next 50 minutes. So you could get stopped out literally 5 times before price actually runs back to the upside, all right, and gives you the right bias. So you need to stay patient, okay? Even if price runs without you, all right, just try to catch a piece of the pie and get in when that candle is expanding. You don't necessarily need to catch the bottom or the top, okay, of every candle. So here I'm remaining bullish. I know that even if we shift below this low here, I am remaining bullish because of the higher time frame structure, because of how that H1 candle closed. We closed above that 4-hour high. I am bullish, okay, until proven otherwise. And even if price reverses and comes back all the way down towards that sell side, I don't care. I'll look for another opportunity during the PM session. This is how I trade. So here you see price is starting to reject. Then right there, exactly right there, this is where we shift below that swing low. So we created a market structure shift on that 1 minute chart. High, low, higher high, lower low. A lot of people, since that candle flipped below its opening price and basically created that breaker, a lot of people will get in shorts here. A lot of people will get in shorts. Remind yourself that this pattern right here, catching the top of an open high flip below the open, is only happening 30 to 35% of the time during that hour. Knowing this, why would you play that setup? Either let it run and then catch a piece of the pie, or let that market structure shift fail in order for you to take an entry back to the upside, which is what I usually always do. Okay, so here sellers are showing you their hands. Okay, they're showing you that those buyers cannot stand those sellers. Those sellers are too aggressive, and we're getting back below the range. We're breaking lows, rejecting highs. So at this point, this is exactly the kind of bait that I want the market to do in my favor, because I am bullish. I know that we need to generate sellers in order for us to have enough liquidity to then push back to the upside. So here, look at what happened. Price resweeps that internal low, pushes back all the way where? To a 15-minute fair value gap, okay? Taps that 15-minute fair value gap, wicks do the damage, body tells the story. I always tell this. If we close below that fair value gap on the 15-minute chart, it is not a good sign for us to go long. Right here, look at how deep we went inside this range. We literally went 55 handles below that fair value gap and closed back inside the range. Closed inside the gap. Look at how precise that is. Okay? As soon as I see this now, and only now, I'm like, all right, the chances of this market structure shift to be a fake out and us going back to the upside, and this low being a protected low slash the protected low of the new H1 candle and the downwick of a future bullish candle, is pretty freaking likely. We pulled back towards a 15-minute gap. We held it. We created a breaker block on the 1-minute chart. So I'm fading, literally, I'm fading that market structure shift, which is happening right here. I'm not reversing the market. I try to go long because of the previous print. Okay, so here, this is where you can go long, predicting that this low is protected. Okay, so this is exactly what I did. Okay, I went long back inside this market structure shift. What I decided to do is trim my take profit right here at this internal high. This is usually what I do. Okay, I play in some ways like I would say I'm more of a scalper. All right, I take my piece of the pie. I really do not care about us going 50, 60, 70 handles to the upside and catching that whole candle, because I'm trading with Tradeify. I have 5 Tradeify accounts. I know that my system works better when I take my profits early and I'm not greedy with it. Okay, so here in this case, what I decided to do, I was like, all right, this low has a lot of chances of being the protected low of the new H1. Look at what happened. Basically, if I had to show you what happened from the open of the new candle, price did this. Okay, so this is 9:59:59 seconds. This is the opening. So price did this. It opened, went higher, so that candle was looking bullish. Psych, go down, go all the way here, literally all the way here. So that candle looked extremely bearish. Okay, knowing that I want the next candle to be bullish, we still need to go down in order to form that downwick of a future bullish candle. So right here is the moment where a lot of sellers are going to be generated, but the fake out is actually going to happen. So then price comes back all the way up and looks like this. The wick is insanely big. Okay, it was at this point right here at around that 40, it was around 90 handles. A 90 handle downwick when you're bullish gives you a pretty good sign that your long is about to play out. So right here, as soon as price would shift above this open, this candle would flip back bullish. Okay, so turn green again, and at this point, you literally know that your trade is going to work out in your favor. Okay, the odds of you sniping that internal high is incredibly high. Okay, right there, and then it will push back to the upside. So this is my thesis. So here I went long. Basically, the long that I took on my profits at the most recent high. But if you want to use that framework fully, okay, the power of 3, the best thing to do is let that trade run until that hourly candle flips and closes back bullish. Okay, so here in this case, went long. We go in the limit order right there. I got picked up. Okay, I had my stop loss exactly right below this candle's low. Take profit right here. Okay, but if you want to be trading with a higher risk to reward because this fits your style, so be it. Have your stop loss tied the same stop loss as this one, but have your take profit being higher. Okay, so right here, price pushes up. Decided to take out my profits right here at that 1051 candle. What is the 1051 candle slash 1050? It is the macro. What is the macro? A macro is the last 10 slash first 10 minutes of every single hour, where there is going to be an increase of liquidity because an hourly candle is going to close. Okay, so at this point, I know price could definitely run and push towards my target pretty easily. Okay, so right here it's 1051, and I would have this high being my draw, and as soon as you take out that high, you are in profits. The framework overall got respected, and you take out everything at that internal buy side, which was made at 1013, and the price tag was at around 389, 25,389. So this was the reason, the full reason why I took this trade. And you can do the same thing, not necessarily just on the hourly, but you can do this on any time frame. Okay, so let me go over another trade that I took, and it was the same thing, literally the same exact framework behind why I took it, and I took it with y'all during the Tradeify TV segment, okay, which was my lunch segment. Same exact thing happened. Okay, so look right here. 11 a.m. candle just closed. It is bullish. What does that mean? We're closing above the previous candle's high, where those buyers are being aggressive. A lot of people will just wait for the new candle to open, sweep that previous candle's high, flip below the opening price, play shorts, and predict that the next candle is going to close bearish. What are the odds of that actually happening? What are the odds of you actually catching the top with a super small stop loss and a huge take profit? Okay, if you have a 1 to 4 risk to reward, you have about 25% chance of winning that trade, even without, just purely based on statistics. Okay, you don't have a lot of chance of winning that trade. Okay, so here, what am I going to do? I'm going to play the continuation. I don't really care. I'm not trying to reverse the market. I think the trend is my friend, and I would be dumb to play the reversal at this exact point, because I know that trying to reverse the market don't happen too often. So here, this is exactly what I said to myself. Look at what happened right here. Price went higher, generated buyers. Okay, that's good. Okay, we don't really care. What am I marking out though? I'm marking out those speedy arrays that got created in a lower time frame than the H1. So here we have a 15-minute fair value gap. We also have a break of structure right here, which is the order block. Okay, we have what we call high, low, higher high. If I'm bullish, okay, the previous candle closed bullish, and I'm remaining bullish because I don't want to reverse the market, then this zone is going to be a pretty big key level in order for me to predict that price is going to create a new high inside this range. Okay, so here, scaling down to this 1-minute chart, this candle currently is printing bullish, generating buyers. A lot of buyers will get squeezed on top of that range, okay, being greedy, not taking out profits, when in reality this is not the best long, even if price runs. Okay, those kind of big trends only happen 20% of the time. You can't base your whole system on the fact that someday price will run without pulling back. All right, you need to base your system off of fake outs, buyers being basically sellers being exhausted, buyers controlling the market being aggressive, and higher time frame candle expanding in a certain direction that you expect. Okay, this is how I frame my trades. So here in this case, I have this zone marked out. So I know right now this candle looks bullish. If I mark out my hourly open, it's right here. Okay, my hourly open is right here. So now, if we're right here at 1206, this candle looks bullish. So what do I want to see from that candle on the hourly? I want us to go back down, fake out all those buyers, okay, and fake out all those sellers also. Okay, I want us to create an upwick, flip below the open, and that candle to turn bearish. And at that point, when that candle will turn bearish, we will have what we call a bearish market structure shift. There is some cases where that market structure shift will hold and that candle will keep expanding and close bearish. All right, good. You don't want to see that though. You're bullish because of the previous candle. So here in this case, you want us to go back down and then find resistance inside this 15-minute gap. So when you find resistance, what is your key level? What is your key sign that price is it's basically it's the moment that you should look for longs. It's when price holds that level and then flips back above the open. So that candle went from being bullish to bearish and then bullish again. Okay, and at this point, when that candle flips back bullish again, you know that this low could be a protected low of a future hourly candle. Okay, power of 3. So here, let me go over on this 1 minute chart. Look at what happened. We shift below this low. Okay, right here below the opening price. At this point, I'm like, all right, this right here is a moment, is exactly what I want to see, because I know there's going to be a lot of sellers trying to sell that market structure shift, that first market structure shift. But we just pulled back into a 15-minute fair value gap, and it's around 12:16, which is usually the time where you should be looking for a high or a low of an hourly candle to get put in. Okay, so here at this exact moment, I'm like, all right, what are my PD arrays that will tell me that those sellers will get squeezed and those buyers are actually being aggressive? Those two fair value gaps. If we're truly bearish, we should hold this gap in order to create new lows. But if we're bullish though, and everything is aligning together, you see how it's not, yes, it is mechanical, but it still has such a deeper framework than a lot of people actually think. A lot of people will just see, hey, Amos, like, it just tapped a 15-minute gap, inversion of the 1 minute, I'm going long. Hell no. What happened before on that hourly candle? What time is it? What time did we pull back? Are we shifting? Like, you need to have more context. It's impossible to be profitable just because of, all right, I'm going to wait for an SMT at the low, a sweep of sell side, a market structure shift, and I'm going to target the London high for 1 to 4. There is literally 0% chance of you being profitable with, like, let's say a series of, I need price to do this, and I'm going long for a 1 to 4, 1 to 5. It's like, I don't know how to say it in other words, but we all tried it. Just go try it for yourself in backtesting and you'll see. But right here, as soon as we flip below that open, I want us to disrespect that gap. And as soon as we disrespect that gap, I'm like, all right, those sellers are being absolutely squeezed. This could be the low of a future hourly bullish candle. Okay, perfect. Let's wait. We push up, didn't hold. Okay, so we hold here, go back down, push to the upside, and then we have the entry. What are the best entries, let's say, in those kind of scenarios? It would be to wait for a pullback towards the key level that got disrespected. Okay, so this fair value gap got disrespected. This is the substance that you're basing your trade off of. Okay, if you're truly bearish, you should hold this gap in order to create new lows. If you're bullish, you will disrespect it. So why don't you go long in this area? Because it's an area of covering. This is how we called it, an area where sellers should have held. They tried to they're basically trying they're trying to defend their position at this exact area, but buyers are too strong. So now, since buyers are too strong, they will get out of their position in either a drawdown or a break even. So if there is a lot of sellers in a certain area, if they want to get out of their position and they sold in the first place, they will click on buy. Okay, basically the concept of covering. You don't necessarily need to know all of that, but just know that when you disrespect the gap, it is a good sign that sellers got squeezed and buyers are in control. Okay, so right here, this is where I went long with y'all, exactly here. Okay, you guys can go and see the VOD review. Had a tight stop, take profit being right there. Okay, price held, he pushed up. At this point, I went break even, and in literally 1, 2, 3, 4, 5, 6, 7, 6, 7. Oh hell no. All right, this was the trade, and it took 7 minutes. All right, actually. So all of this framework to get in an inversion for value gap. But while most people think that you get in inside this inversion for value gap just because mechanically you burst it through that gap, is not the real reason. All right, it's not the real reason. You always need to find the bias. Let's say I saw a lot of YouTube videos, and like the people were like, all right, I was bullish today just because of that, and then they go super fast and they don't explain why they were bullish. You guys know that this is the most important thing. The reasons why you're bullish and your overall bias is the number one thing. Like, you should put so much emphasis on that first before then going back down towards the 1, 2, 3, 5 minute chart. The reasoning behind why that candle will expand is everything. Literally everything on your chart depends on that. So if you don't have a good enough framework overall that you could rely on, then scaling down to those lower time frames is going to be an absolute war zone. Okay, it's going to be a battlefield. You will not know why price is going to the upside, why price is going to the downside. You see how far we went on this explanation, and you guys saw how many fake outs I was actually looking for. If you are only looking at the 1 minute chart thinking that this will save you and you will become profitable doing only trading the 1 minute chart, look at what happened right here. Like, it actually makes no sense. We created a market structure shift here inside this range, pull back down, hold this gap, push through. All right, then we create the same kind of market structure shift again, hold this low, push through. Okay, so timing, higher time frame candle expanding, and then and only then, once you have all those boxes ticked, you are looking for lower time frame confirmations. Okay. I think there is some questions out here. How long it took you to become profitable? I'm not gonna lie, it took me like a year, 1 year or 1.5 years. But it's not like, I wouldn't say that becoming profitable is just you know you just flip a switch and you become profitable. Becoming profitable is a forever process where you could be in drawdown streaks, you could be in a losing streak, you could be in a pretty sloppy month, sloppy quarter, but how are you actually responding to what is happening to you? And that makes you a profitable trader in a sense. You like, I don't, let's say if I have a losing month or if I have losing weeks, I will not consider myself not being a profitable trader. Like, I don't care about the outcome of the month. I really care about the outcome of the year and how am I adapting to the market conditions. What can I do in order to journal my trades to get 1% better every single day? Yeah, man, there has to be conviction and much reasoning to an entry and moves. Yeah, absolutely. Like, if you think it's just purely mechanical and price needs to do this, no. Like, come on. Yeah, exactly. The 1 minute is not ideal to see the bias, which is which is why I always base my trade off of higher time frame structure. Okay, why am I basing my trade off of a higher time frame structure? Is because you don't your system don't need to be extremely like hard to execute on or hard to comprehend. This is not what I actually want um, to send as a message. What I want to send as a message is your system needs, you basically need to know the reason why someone who's going against you at this exact moment will lose over the long run. Once you can say that and state that in every single trade, you know what you're doing and you have a trade that is replicable, and you can basically sleep well at night knowing that you can find 10, 15, 20 handles every single day in the futures market. Once you know that and once you have that confidence, everything changes. Now you sleep well. But if you just play around with the discretion, oh, I feel like this is a good long and this, and you are basically just lying to yourself every single day, you know? And a lot of people hate to hear me talk that way, but I'm that guy. I'm the guy who um you know would yell at his own brother, basically his own family members, and call them out on their bullshit, or even my friends. I'm that kind of guy. I'm kind of the piece of shit that you know calls you out on everything that you do. But so be it. All right. First time on your stream today. Love it the way you explain it. Everything. Thanks. I appreciate you, my brother. This is why I do that for. Much, much love. You are feeling up gaps. Thanks. Great stuff. Appreciate you. This is the thing. Also, a tweet that I posted today. It's like there's gonna be weeks. There's gonna be decades where weeks go by. Okay, and there's gonna be weeks where decades go by. Okay, in terms of money. Okay, what does that mean? It means that you could be putting in a lot of efforts into something, and then one day everything flips because you either change few things into your system, okay, that make you profitable, or you just adjust few things that were basically holding you back the whole time, and you just didn't know about it. Or it may be you find someone that is keeping you accountable to your system, or you find a community of people that make you enjoy trading and make you want to grind. You're always one day away from changing your life. I always have this vision. Always, always. That keeps you extremely motivated to wake up the next day and grind. But if you're comparing yourself though, it's pretty shitty. Is it really possible to always be able to identify daily bias correctly before entering a trade? No. Like, the bias overall is something. Okay, let's say here I had a bias. You see here, okay, I had a bullish bias because of what the previous candle did. But I could have been wrong on that bias, but I'm not necessarily going to lose the trade even if I'm wrong with the bias. Let's say here it actually shifted right here at 12.17. It shifted. And imagine it held and went back down. Even if I was bullish, price actually reversed. It was part of the 35%, 30% of the time price reverses at this time. So be it. I just didn't get in the trade. My bias was wrong, but I stayed cash. So I really don't care. This is also something you don't need to get in a trade that is not screaming at you to get in. So no, it's impossible to get the right bias every time. What you can do though is have a set of rules, or like sets of rules that will make you a little bit more patient and will require a little bit more confirmations for you to enter in a trade, so you get faked out less frequently. How long you hold your trades? I'm not gonna lie, I don't remember. Let's say either I base my trade. I usually do this, guys. I usually either base my trade off of a 15-minute framework. Okay, so I would use exactly the same thing that we're doing now, but on a 15-minute chart. So I would predict one 15-minute candle, the expansion of a 15-minute candle. So these kind of trades, I'm in for like 4 or 5 minutes. Okay, and then the hourly, I also do this on the hourly, which is exactly this trade. Both of those trades. These trades would be like 5, 10, maybe 15. But I'm more of a guy that enters a trade and wants to get in and out pretty fast, because I know the danger of holding a trade for too long. I think there is a lot of randomness into those markets, and the longer you stay in a trade, the more you expose yourself to a lot of randomness related to spoofing, manipulation, this, that, anything could happen, or like Amazon dropping, or this or that. So like, I don't really agree with the seconds chart scalping and this and that, because I think or just the high frequency of trades, like let's say taking 5, 10, 20 trades in a day, because of all of this manipulation and all of this randomness in those markets. Okay. Are you trading in 20 minutes? maybe ask the Tradeify team to get me in for the Asia session. That would be amazing. I'm not gonna lie. If I was trading the Asia session, I would be trading gold, but I would have to go back to the drawing board and just look at what strategies are actually working at that time, because NQ during the New York session is not acting the same exact way as gold. A lot of things you can learn from backtesting a lot from that pair, because I truly believe that these pairs are completely completely different pairs and are completely different on the systems that work on both of them. Wait, I think I saw a question regarding volume. You never looked at volume, just this naked chart. Great, man. I definitely did look at volume a lot back in the day. Okay, I looked at order flow volume too. I looked at the TPO chart, so time price opportunity. I looked at the volume profile. I looked at everything, literally. Point of control, value areas, single prints. Literally, I know everything. Okay, and what I concluded from all of this and trading those kind of systems is price action is king. And the reason why you enter a trade will always be based on the higher time frame and your overall understanding of the 1 hour, 4 hour daily chart. That, understanding a footprint confirmation is not going to make you profitable. Understanding that buyers are stepping in right here is not going to make you profitable. As soon as you understand the concept of displacement, um, you know, you understand aggressive buyers, aggressive sellers, who's in control, what's the structure on the 1 minute. The reason why I tell you guys to stop looking at the 1 minute chart, and it's like the worst thing ever for a beginner trader, is that as soon as price is breaking structure to the upside, let's say right here, taking that pullback, even if it's a break of structure to the upside, that break of structure to the upside doesn't mean that price will expand, hold this order block, and create a new high. Why? Because price, at the moment that you see it trading at 25,509, it's already at its fair value. Okay? Those, when you see price at the in the 1 minute chart, okay, on the 1 minute chart, you're only seeing who's in control right now, but you don't have the context of what are those guys actually preparing to do, or what are the next moves. Okay, it's basically, let's say, I always say this as an example. It's like being in a boxing match. If you're only looking at the 1 minute chart, let's say I'm fighting against someone else. Okay, if you're only looking at the 1 minute chart, it's just like looking at my opponent and being like, okay, he just jabbed, he just crossed, he just shot a double jab cross. That will not tell you what he's most likely gonna do with those jab cross, or like what is he preparing to do. Okay, studying it and being like taking it on a bigger picture, analyzing those, let's say, what he's actually doing and preparing to do, is looking at the higher time frame. Okay, it's exactly the same thing. So if you want to catch someone with an uppercut or a backhand, then you need to know what are the openings. Okay, and those kind of openings, you can't find them on the 1 minute chart, because the 1 minute chart will just state that price is right here, but it's already at its fair value. Like, even if price holds this order block and goes to the upside, why do you feel FOMO because you didn't enter, just because you recognize that it was an order block and buyers were strong? A lot of people do that mistake. It's like, let it go, man. It will run without you. We don't care. You know, zoom out. Zoom out. The higher time frame is bullish. All right, even if it goes down, shifts below the opening price, shifts below the most recent low, creating a breaker block. Do you know the odds of this reversal happening at this exact time? Or do you want to wait? Do you actually want to predict here that this market structure shift will hold in order to create new lows? Or can you be a little bit more patient and wait for that market structure shift to absolutely get disrespected, so you get a good buying opportunity right here for a quick scalp? You know, it's the same thing. And trading is not like boxing. Since trading is an individual sport, let's say, since boxing is an individual sport and trading is the same thing, um, there's a lot of concepts that I use in order to explain what I think, like, let's say, the framework and the mindset you should have as a trader. And it's the same thing. Let's say trading overall is a battle. Okay, let's say I'm fighting someone else, I'm fighting an opponent. it's exactly like my year of trading. A lot of people think that this battle is a daily battle, so this is why they are revenge trading, and they are trying to get back their losses as soon as possible because they view every single day as being a fight. But in reality, the fight is a yearly fight. It's a quarterly fight. Okay, so for me, let's say I always judge my results off of the last 4 months. Okay, if I did bad in a month, I don't really care. There is months where you're gonna have to deal with the drawdown, and you will need to just adapt to the market conditions. You can't make money in some market conditions because your job will be to survive and to tweak few things in your strategy in order to survive. Okay, so let's say I'm fighting my opponent. How am I viewing trading overall? Is that my like I have a fight, and that fight is a 1 year fight. Okay, a 1 year fight, and even if I lose in a day, it just means that the guy hit me with a jab or hit me hard with an uppercut. All right, did I get dropped? No, I'm good. Okay, I need some time to back off because I got clipped on that, but I'm still good. I needed to take a look at the bigger picture, and I can't give up on that fight or just um, change gloves mid game, like mid fight, just because um, you know I got hit with a straight hand, okay, or an uppercut. I can't. It's a yearly fight, so even if you lose literally a full on round, it's exactly the same thing. Trading is 12 months. Okay, a year of trading is 12 months, and a game, okay, a boxing match is 12 rounds. It's the same thing. Even if you lose the first four, you could still win the game, right? It's not finished. It's not over. So this is always the mindset that I have. So I try the best thing to do, let's say psychological wise. Sorry, I can't speak. 6 p.m. here. But the thing is, I try to never let any negative emotion or negative thoughts enter my mind. As a trader, I always think positively and always say to myself that, all right, even if I lost this week or even if I lost this month, I know what I'm doing. I have enough years of backtesting data to know that I should be trading that system, and I will eventually get out of that drawdown. I always keep the right mindset. I never try to deviate from my plan. And the only way for me to do this is to put myself in a position where I'm trading a lot of accounts. I know what I'm looking for in the market. I know my exact strategy. I know the returns that I actually that my strategy should give me. A lot of people, I think, are blinded by comparison because they think some results are actually attainable with their strategy. It's like, yes, there is going to be certain people that will make a shit ton of money, and if you compare yourself to them, you're going to shoot yourself in the foot, because if you have a high risk to reward and you are on a win streak, you will be able to flip that account. Okay, but there is a lot of downside to that high risk to reward system. There is bigger losing streaks, there is a big variance, so it's hard to keep those prop firm accounts without blowing them. So overall, if you compare yourself to someone else's highlight, it's impossible to keep up with the game because you will just strategy hop. And one of the biggest thing in trading is the shiny object syndrome. And I imagine the shiny object syndrome is such a real thing in trading because you truly believe deep down that even if you have a good strategy, even if you backtested years of data, that something is better and something will give you a higher win rate and something will give you, more time outside of the chart. This, that. There's um, a lot of people that get caught up into that shiny object syndrome. And one thing I'll say is that everything takes time and everything takes adaptation. The concept of adaptation is really what's going to turn you profitable, and not necessarily the system in and of itself. It's how good are you to dodge those bullets, to not take multiple losing setups, even if the box are ticked. Are you able to adapt to certain market conditions? If you are not, you will die. Okay, it's the adaptation, not necessarily the strategy. One thing I'll do, let's say for me, I know my strategy. I have 4 plays in my playbook. But one thing I know is that my framework overall throughout the years is pretty decent. Okay, I can really trust the fact that a candle will expand in a certain way because of the overall thinking um, behind my system. Good. Once I have that framework overall that is set, now here comes the hard part, which is the entry. Timing the market is so hard with your stop loss being set, your take profit being set, and just going back to back, taking trades that are repeatable in the long run. One thing that will happen, let's say with my system over the long run, is that there is going to be market conditions where, let's say I enter here, I will get paid a lot from entering inside the breaker, okay, to create new highs. But there's going to be certain market, which is basically what I'm doing now. There is going to be some market conditions where price will not come back to the breaker, will fill this upper portion, so the premium fair value gap, and then will run without me. If I see it happening through months and months, let's say through weeks and weeks, I will start to be like, all right, maybe the market is not aligned with my strategy right now. Like, can I do something with my strategy in order for me to capitalize on those kind of trades and just get my feet wet with this new entry? The overall framework is going to be the same. The way that you enter, though, it's either you enter on a premium or you wait for an extremely big discount. Okay, let's say here you see that price always stops you out. Okay, on that breaker, stops you out and then runs to your target. Adapt. Is your framework, do you need to change your whole framework? Hell no. But this is why having a framework in the first place is the most important thing, because you need something to rely on and something that you can actually base your whole trading systems off of. The way that you read the chart is number one, and then your entries is number two, and the entries are hard. They are hard depending on the market conditions, but your framework overall needs to work. Okay. How will you approach the night session? Will you base your bias with the latest candle or wait for the first hour print? Good question. Always look at breakouts or reversals. It's pretty simple. If price is breaking out of a range, I would expect price to expand in the direction of the breakout until proven otherwise. Okay, let's say I take this for example. Okay, we're breaking out, creating a 15-minute break of structure to the downside like this. All right, I would have the same kind of bias. Price will most likely go down first, hit those levels, push back to the upside, creating a bullish candle on the 15-minute. Okay, this candle will go from being bearish to then bullish, and then what do you think I want to see? I want it to turn bearish again, to then know price is going to go down. You know, same exact framework. So here I would expect price to expand and go to the downside, basing my trade off of what, like, did we break structure to the downside or did we reject that level? Wicks do the damage, body tells the story. If the body is telling you that price is accepting lower and lower, why are you trying to catch the bottom here? Like, of course there is going to be market conditions that are going to be pretty favorable for that kind of system, but overall it's not, I would say it's really hard to replicate in all environments. Yeah, man, especially in this market, it's a must to have. You have to and need to always be able to adapt. I had to learn adaptation too. Yeah, it's the hardest part in trading. Why? It's because you need to take those hits. It's exactly like, let's say you are in a boxing match and the guy in front of you he's too good for you. Okay, it's exactly the same thing. Even if you studied the guy before, he comes in, let's say, in the ring, and just he has such a good left, and you didn't expect him to have such a good left. Like, the way that he's entering, you just can't adapt to him. So what you're gonna do is that you know that the next round you're most likely gonna lose, okay, just to be able to have the read on him. You're gonna be like, all right, I'm gonna take the hits, I'm gonna play a little bit more defense, have my guard up, okay, and as soon as it's gonna shoot, I'm gonna have to really process it in my mind. So you're gonna take back-to-back losses, but it's gonna be for, the best. And This is important in trading, and not a lot of people understand the concept of drawdown. And even me, I understood that so late in my journey because I truly believed in that shiny object syndrome. I truly believed, um, I truly had that syndrome. Basically, I really thought something was better than the other. You do box and moss, such a pretty. Got me blushing here, bro. Chill. But yeah, I do some boxing for sure. Definitely. All right. Any other questions? Okay, yo, Leah with the question. I'm using my strategy, but on different products. Problem is the outcome of all the different variables between the distributions of losses versus wins on multiple products is not doing me justice. I think I need to trade one product per account or just stick to one or two products. Absolutely, I absolutely agree with you, Leah. Okay, I absolutely agree. The reason why I do not mix up a lot of strategies is that every single strategy has a certain distributions of wins and losses. Let's say you have strategy number one or pair number one, strategy number two, strategy number three. If you trade them all together, this strategy could be in a win streak of five. But since you are mixing up strategy number two, which is in a two loss streak, then win, loss, win, or this one, which is in a win win, loss, loss, win, you're not even going to see progress. If you were only trading that strategy number one, you would basically be almost payout eligible. Okay, but if you are mixing all of those strategies together, so here is five, it's 15 trades. There's, you know, maybe you did a certain mistake here or a mistake there, and then you're down on the account or you're literally break even just because you're mixing up strategies. It's really important to know, or let's say, uh, that kind of randomness also into that distribution. This is why I always like to maximum trade two strategies at the same time with my set of accounts. I split them. Let's say for me, I have four plays, and I have a play that I only take on my live account. Okay, I literally, I literally never take that play on my five Tradeify accounts, even if it's good, because I know that if I mix up the distribution of that, it will most likely create some sort of um, either losing streak or break even streak because of that random distribution. You never know what are the next set of 10 trades, 15, 5. You never know. And you can surely not base those results and tell that your strategy is profitable or not profitable based on that super small sample size. If you only took 5, 15 trades, like it's not representative of the true edge of that system. You need to take at least 100, 200 in order to know, okay, this is the return that I'm getting. It's the law of big numbers. Okay, if you flip a coin 100 times, there are still chances of you hitting, let's say heads 75 times, but it still doesn't mean that you have an edge on that coin flip. You don't, because if you do it a million times, you will end up with 50-50. It's the same thing. So like the law of big numbers is extremely important to understand, but this is why I keep telling you guys, trade low risk to reward systems, because if you trade low risk to reward systems, then the likelihood of your next series of 5 to 10 trades to be winners is way more likely than being in a loss streak or you having to deal with that variance, which is the worst possible outcome of your system. Okay, you get paid off of the next 10. Okay, next 10, 15. Being smart. Seriously, Amos always seems to have a solid mental game. It's key in this industry. Absolutely, appreciate you, but it's everything. Once you have the edge, you will basically. I think the hardest struggle you will have to deal with as a trader is actually when you get your shit together. When you get your shit together and you're not gambling anymore, you will feel such, like, you will have expectations, and as soon as you have those expectations and they're not met, these are this is exactly where the demons are hunting you. Okay, When you have a backtested strategy, you know exactly what you're doing and you know the returns of your strategy in the past. Now you look at the chart and you can't replicate them and something is wrong. This is the moment where you start to tweak out. But if you have the right mindset, you will eventually get out of that drawdown. You will eventually make money trading that same exact system or being able to adapt over the long run. I have one strategy, but say uh, NJ gives me losses in Asia and London, and then hit my daily loss limit and CES trade in New York. Yeah, I think trading one session also is a good thing. You know, my strategy doesn't work as well during the Asia session, and I learned that the hard way. You know, it doesn't work as well. Unfortunately, when the market isn't as volatile, I'm getting faked out in my own framework, and I realize that. But there's no way to know if you don't have the data. So for me, I just don't trade those kind of sessions. If I had to trade a session, let's say if I had to trade, let's say I didn't have the same time zone. Okay, I would be trading, let's say, gold during Asia. Okay, trying to scalp it, or I would be trading, let's say, uh, NQ during London session. Okay, if I was like, let's say, not from here, not from EST. Um, I have done a lot of backtesting. The products I trade have good data to trade off. I just need to figure out how to do it live in backtesting and forward testing and demo. All sessions did well. Try to mix up something. All right. Try to mix up something. Try to change something. Okay. Because insanity is doing the same thing over and over again and expecting different results. If you see that it's not working, if you see that you've been doing this exact strategy or you've been having the same exact framework for months and it still didn't show you the exact returns that you were expecting or the backtesting showed you, basically, you need to tweak something. You need, it's just, it's impossible to just keep doing the same thing. This is the concept of being able to adapt. Maybe try to lower your risk. I want to trade multiple pairs. Yeah, maybe. Yeah, but just keep going, Leah. You'll figure it out. Absolutely. If you just come with the mindset of, all right, I'm gonna try to get better, and I actually am leaning towards that feedback rather than just showing up, it will change. It will make the difference. Yeah, for me, when I first started, I knew exactly what I was doing and almost passed my first account, and now I'm on my journey to consistently trading. To me, it's easy. I just do mistakes. I'm on the process. Yeah, sometimes it's harder to figure out yourself. Everyone comes from different financial backgrounds, and you know, if you are in need of that money, there is no psychological um you know cues or help I can give you. You know that. You know, the only thing we can do is take it so slow, and take it in such a professional route, okay, that you will not hurt yourself in the process. You will not blow money that you earned through your work. Keep it slow, and then if you don't have the money in the first place, one payout on a 50K growth will potentially change everything for you, or will make you, will put you in a better position to reinvest into more accounts. You know, so at this point, like, you can't fuck around too much. All right. So I appreciate y'all so much. This session is already came to an end. We talked first part of the session. We talked about the two trades that I took today, the framework behind it, the reason why I'm not trying to reverse the market at all times. I'm trying to play continuations more than reversals. And if I'm trying to play the reversal, I'm looking for extra confirmations. I'm looking for what is happening on a higher time frame candle. Then we talked about psychology for sure, and the overall approach of trading, which is a huge part. of your journey. So appreciate y'all for being there, for showing up. I will be giving away 250K growth accounts right now. So what we'll do is that I'll just ask you guys to type a number from a certain, let's say, I'm not gonna say it now, but from a let's say it's not gonna be this, but I will say, okay, type a number from 0 to 100, which is not, it is not what I'm gonna ask. Okay, 67. But yeah, I'm gonna say that, and then if you have the right number, which I have in mind, then you'll win the giveaway. Okay, you'll win the 50K growth. But for now, let me just go. I just gotta do one thing, 1 second, and I'm coming back in like literally 1 minute maximum. Oh shit! From 300 to 400. Come on, 300 to 400. Come on, come on. Oh shit! It's fast. Oh my god! I need to pull out my phone, bro. This is insane. Still, no one has it. Still. Oh shit! Bro, I need to pull out my phone for that. This is too fast. Okay. No one got it still. No one has it. Okay, we got a winner. Let me just control F on that. I can't control F on that, unfortunately. But the winner that I saw was 359. Okay. Bro, did you not win one of the last, I don't remember, but I think I remember your name. 359. Who said it first? Can someone tell me who said it first? Bro, this was just all over the place. It took you guys like 5 minutes to get it. 300 and I can't. I just can't command F that. This was too fast. Um, but I'm looking back, double checking, and yeah, the first one who typed 359 was Nathan Roji Trades. All right, I don't have access to the bot rigs, bro. I don't have access to it. We're doing it the OG way, so people can just spam. So Nathan Raji Trades won. It was 359. And then okay. Okay, the first okay, second one would be from some people are already typing. Yo, chill. All right. So it will be from I'm gonna type it. I'm gonna type it so you guys have the reaction time. All right. All right, go. 250 to 350. All right. I'm gonna pull out my phone here. Oh my god, he got it. That was quick though. The daily VWAP 257. Damn, two people typed 267. Damn. Unlucky. Unlucky. But the daily VWAP with the second 50K growth account. Come on, let's go. So this is the end of the giveaway. This is the end of the backtesting session. I appreciate you guys so much for showing up, showing love, and being there in the chat, active, asking questions, and just overall just vibing. So appreciate y'all, and I see you guys tomorrow at the same exact time, which is gonna be at 12 p.m. EST for my live session on Tradeify TV. And I'll see you guys also on Wednesday at 9:15 a.m. EST. I'll be there as a guest with Miriam, Nick, and Matt. So you guys don't want to miss this. Appreciate y'all, and I see